Hey, this is Dave with Rough Notes Magazine. We're all about helping agents and brokers thrive, and we're impressed with what you're doing. Can we feature you and your team on our front cover?
Jeff, tell me the feeling you first had when you heard that your agency was going to be on the front cover of Rough Notes magazine.
Well, I'll tell you, Jason, we were so excited to get that call. After really grinding it out, I've been at Rate Insurance for about 3 years. I've been 35 years in the business, and we've been grinding it out. And to get that phone call and to get that recognition was just huge. So as soon as I got it, I immediately, spread the word out to my leadership team and others, and they were all super pumped. So really good stuff.
It is. It's amazing, whether you read it daily or you grab it every once in a while. It's nostalgically known in our insurance industry, Rough Notes, And I remember there used to be so many others like something Underwriters. I can't remember. That was a big one
Yep.
out there. I know obviously the independent agent magazine by the Big I, that's a staple out
Yep.
there. But what's funny is a lot of those have kind of come and gone as far as popularity, but Rough Notes just still is the benchmark for what we look at as agencies. And so that's fantastic. I know that had to be excited. One day, maybe I won't be doing the podcast for him. Maybe I'll actually get to grace the cover, but really, really exciting. Jeffrey, I'm going to say Jeffrey, and I apologize to all
Sounds
you
good.
Rough Notes listeners. It says that on the screen, so it gets me. But Jeff, why do you think that they chose your agency over all the not hundreds, but 40,000 agencies out there?
Yeah, great question. I think the reason why we are selected is really just our emphasis on technology. We are, 96% personal lines, and
Okay.
we've got, our platform is fully integrated, with our loan company that owns us. Guarantee Rate is the second largest originator out there, and we get about 60% of all our leads from them, and about 40%, from other referral sources. So really, it's we are a fintech driven, agency. We've got one platform, and that's Salesforce. So we've got our sales and service, all within that platform. We've got a group of engineers that have been constantly upgrading it, constantly customizing it for the team, and it's really all about speed. So I think one of the reasons why we're selected is just we are very fintech focused. We all we need is a name and address. We can start moving to get quotes, out in the marketplace, and basically it's all about speed and delivering, quotes quickly, but also most importantly is being able for us to have real quality conversations with our customers on the phone. So it's definitely tech driven. The other thing too is, I just the independent agent model is just phenomenal, and we've got access to 100 plus carriers out there. Of course, every single state is different. We're in the hardest market we've ever been, in my lifetime, in this business. And being able to provide choice and options is what it's all about.
Jeff, how long is your lifetime in this business?
Oh, man, I've been doing this. I'm going to date myself 35 years when I first got in the business. So back in 1989, I started with Chubb Insurance, and that kind of got my founding in the business. I didn't think I was going to be an insurance agent, insurance broker, and they went from Chubb, went to Marsh, was with a company called Confi, and we did a ton of agency M&A. And then I was recruited to come on board here in 2021 to run the agency and really kind of take what was built and take it to the next level. So, our agency was founded in 2008. It was really just to serve the loan officers and to allow them to be more efficient and get their loans closed faster. And then, right after COVID or during COVID, a strategic decision was made and saying, hey, listen, let's get this agency to stand on its own. And let's take, what's here. And, they hired a head of marketing. They hired a head of technology, head of servicing. I came on board to lead the agency, and I'm blessed with really, we hired a head of sales. So really blessed to have a strong leadership team. And, we're growing at about a 30% clip, and we're profitable. That was the key thing, is also to be profitable in this marketplace. And we're growing at a big clip. We're writing in all 50 states. And I've got employees. Yeah, we're remote. So I've got one location that's in Schaumburg, Illinois, and I'm based here in Summit, New Jersey. I have an office here, but we're remote, and so we've got employees that are spread across the country in 40 different states. So I think that's pretty significant because we're not just kind of a one location call center. We actually have individuals that are in the local market that understand the risks of that local market, and they've got dedicated sales leaders for the West, a dedicated sales leader for the Midwest, the Southeast, the Northeast. We do have structure, but we also are remote, and we're grinding it out. We're grinding it out just like
Jeff,
other agents out there.
What did you say your title was?
I'm an executive vice president, head of insurance.
Okay. All right. It's funny. I got a couple questions to pop out of there, but one of the things that popped out immediately was you guys started in 2008, kind of to make efficiency better for their loan officers and all this. And, and which is crazy, right? Coming out of 2008, which we were coming out of one of the worst, I guess you could say recessions, depressions, whatever it was at the time. Exactly. It was a financial disaster is what it was. But what's crazy is that we look at how turning points and big time things like that in the world change who we are as businesses, right? Because it's funny, you're coming out of the 2008, this major thing has created the agency, whatever that infancy idea was. And then you said you transformed again during COVID. Right. And actually right after, which was 2021. And I don't find that ironic, right? Because I remember how much of the doldrums and business was just down and nothing was happening. But it was amazing with or without the payroll money that we got, insurance agencies were going to be okay, right? And I think Absolutely. That was probably, I'm just guessing here, but the powers to be there at guaranteed rate or in the infrastructure there they probably noticed, right? Like every other business vertical is plummeting, but insurance is still riding actually just the same, if not better. And so I can kind of see them thinking to themselves, we say it all the time, Jeff, and you've been in the business long enough. Like, I'm not saying that it could never happen, but we are insulated from the highs and the lows of our economy. You know what I mean? And it's just really, really crazy. Do you think that had something to do with why they made that decision in 2001? Any background story there?
No, absolutely. And, our owner of Ray Companies, Victor Chiardelli, is an innovator out there. And he is a person that says, hey, he sees trends and let's do it. And also, too, is what was really interesting is that, COVID happened. Everyone had to isolate. Insurance you still need insurance. If you have a home and a mortgage, you got to have homeowners insurance. If you own a car, you got to have car insurance. And also, too, then the rates started changing. So all of a sudden, people started buying more homes, and other things were happening in the marketplace. So we decided to double down. On that and continue to grow, continue to invest. And then by doing that, we're in a really good spot. So for instance, too, is that we look at markets right now, California is tough, Florida's tough, but we made a decision to double down. So we're writing more business now in California. We're writing more business in Florida than we ever had before. And we're doing it with the state-run companies. And of course, I can't place business with Travelers of the world or the Safeco's of the world and some of these strong names because they're not operating those areas. They can't get the rates, or they want to move their appetite elsewhere. And we just said, hey, wait a second, this is a great opportunity because these markets still need insurance. They're exploding, especially in Florida. So let's continue to help our customers. So I definitely think, Jason, is you look at things that happen out there and use it to double down and to really then take it as an advantage to grow your business.
I love it. I love innovative people. I heard a great saying the other day, Jeff. Never had heard this. You get excited sometimes when you hear a new saying, right? You're like, dang, I thought I was at 46. I'd heard them all. But I've talked to a lot of my mentors who are much older than me, and they tell me, no, you'll still run into them every once in a while. One of the people said that that most great things and great businesses don't start with innovation. They start with imitation. And I think sometimes people like your powers to be, who you said was, I can't remember his name, who sees trends. I think that's what a trend is, right? I heard the guy who was explaining this and said that innovation versus imitation. He says it really wasn't very tough to figure out that coffee was a big seller when Starbucks mastered it in America. Right? It's something that you could just take and imitate in other places and you were going to be successful. In a way, sometimes that's what trends are. Now, they're sometimes not as obvious, right? Because we're sitting there going, shit, I really hope I'm getting ready to drop a bunch of money into this and this does pull out. But you can kind of see those. And I don't know about you. I can see the trends of where we're going. And we'll talk about that here in a minute. Like, what are these trends that we're looking at for the next 2 or 3 years? I'm very passionate about that right now. But I wanted to go back real quick to your model, because I know that there's a lot of Rough Notes listeners that are curious right now. How many? So you guys are coming in 60%, I think, of what you said, come in leads, coming off mortgages and stuff like that. How many leads roughly are you getting in a day or a week or a month? What is it?
Yeah, well, great question. I mean, we've got probably on an annualized basis, we're probably getting about, 20,000 leads, that are coming in. And really, it's a lot. And then you divide it out, on a monthly basis. There's cyclicality, in the business as well. Wow. But in just about majority of our cases is that we're leading with the home. We lead with the home, we cross-sell the auto, and then we look to cross-sell the other lines of business. That's who we are. But we've got to be careful now because, there's so many carriers out there that want bundled business, and which is a good thing. We want bundled business because it improves our retention rate going forward. So we have with all of our, so again, I'll just kind of summarize is that we are structured by region. So we've got employees that focus on, let's say the West Coast. We've got employees that focus on, the Southeast, the Northeast, the Midwest. Okay. That's on the sales side. And then also on the service side, we do the same thing because, really, just like with all our agencies, where we make money is on our retention. And we've got a really strong retention rate. We started the year off at about 87% in terms of our PEF retention, and it's come down a little bit. So we're about 85, which is, about the market average or probably a little bit better. And that's really just due to customer shopping. And again, I talked to some of my colleagues out there and, they're seeing the same thing, but, it's really is, we've got leads that come in for mortgage, our loan officers don't have to do business with us. So we have to build relationships with them. We are fully integrated, so again, is everything in the loan file. I have all that information that comes right into our system, which is Salesforce. So I don't have to ask any stupid questions. I have it right there. Gotcha. And we do the same thing with our referral partners outside of mortgage. And that's, home inspection companies, concierge companies, alarm companies, moving companies, where their data is also integrated into our system. And then we also get warm transfer phone calls, as well. So when the warm transfer comes in, automatically that customer's information sits in our system and we can start getting to work. Going forward. So that's really kind of the difference and again is, there's other competitors out there that are probably doing something very similar, but I think the name of the game is basically connect all of your systems together to allow a more efficient experience for the customer and then allowing yourself to immediately, go, get your quotes. And of course, just like in Florida and California that I mentioned, no one's on the radar, so we have to go direct. That's interesting as well, but we are starting to look at AI. So artificial intelligence and looking how, right now, how we're using AI is all of our calls are recorded and summarized. The file is summarized. So when a person comes in, they can see exactly what's going on, when the last phone call came in, what's the summary of the file. And what we're working on now is how we can use AI to kind of assist our agents in terms of like where to go. Like, so if you have a new agent and say, hey, I've got this risk in, Illinois, who's the best market I should go to, kind of give that assist going forward. So, so we've got a lot of leads that are coming in and we want to get more.
So we used to have, and some of us still do, we have that person in our office who does the quoting. and they refuse sometimes to use a rater because they just know when account comes in, they know where it's going to go, right? And I remember I used to hear from my reps, they'd be like, no, you're wrong. You don't actually know where it's going to go. And I'll be honest with you, over the years, yeah, a couple times they were wrong where that rate should go, especially if a company came out with a new homeowners product or came out with new rates. But majority of the time, they were right. They kind of knew, right? And so you can kind of see by taking AI, which is nothing more than that person on super steroids in their mind, you could see how 80 to 90% of the time it would be right, which if I could make decisions where 80 to 90% of the time I was right, I think I'd take my winnings and I'd go home. So that is a good point there, because that's something we've really heard a lot is, oh, don't rely on the rater. You need to actually go do a quote with us. And we can kind of see where there's benefits both ways, but probably more towards the carrier in that regard. So that's really, really interesting. So, wow, this is cool, because I think for another thing I'd like to tell you about as well, in case you just haven't seen it, and Rough Notes list is for you. Anybody who's doing a lot of the states that don't work on the raters, there's a company, AI company out there called Gaia, Gaya Technologies. And what's beautiful about this, Jeffrey, is I believe that the your business model is the business model of the future. Okay. So we, back in the 70s and 80s, and I'm just going to paraphrase time here in this, back in the 70s and 80s, we had this invention of, wow, there's people out there who are already dealing with homeowners. And so I need to go market to those people so that I can get that homeowner's business. I could just be another person that's helping them perform their job. Right. And I think that what we've really found out are the agents today that are really killing it in personal lines are doing exactly what you are doing. They have actually, now they're not doing exactly. They aren't there yet. I think you're the finished model, right? It's not so much of, okay, hey, now I had Billy Williams said to me one time when I was first in the insurance industry and he was consulting me. I was trying to get personal lines because I write commercial lines business and I wanted to get personal lines. And he said, so what are you doing? And I said, well, I'm writing these blogs and doing these videos to let people know that they can call me for their insurance. And he said, well, how many roughly are you targeting? And we came up with 1,000. Okay. And he said to me, well, why are you going to market to 1,000 when you could just market to 10 people who each know 100? And see, that blew me away. As a young producer, I was like, wait a minute, that makes a lot more sense. So that's what you guys have done. You market to people who are then going to send you a lot. Where I think you've capitalized on it, and this is where I think you're in the catbird seat, is you've capitalized on bringing that data in, right? It's not so much, let me just hang out and wait till they send me something. It's no, let's put this as part of their process so that we're part of the process that gets that. And that goes back to another thing that Billy Williams told me, which I think you're living here, is that your net worth is directly proportional to your network. And I think we sometimes think of that as us at the chamber meeting or something. But this is what you're doing, right? The bigger that you guys can make your network, as you said, in home inspectors and concierge services, the more that you can do that, you're increasing that network, which is increasing your agency's net worth. Am I right or wrong there, Jeff?
Absolutely. You know, the key for us is just to, and also too, is we don't want to be, because with interest rates, going up and going down, we just don't want to be captive to one market. And
that's
so
right.
I think with any agency out there, you got to make sure that you're diversified and you've got other referral streams coming in. But also too, is we also do the blocking tackling. So we've been hiring a lot of really great employees that also have their own referral sources and also their own, business that they can bring over. And I think just like you said, Jason, too, is that asking for referrals. So we put that into our process as well. Because like you said, you bring in one account and you ask for a referral, and then you can also bring in, a couple other, different pieces of business. So I think the key in this business is diversify. And the other thing that we're doing as well is, we're continuing to invest in technology to continue to be more efficient on the front lines, continuing to get direct API connections to our carriers so we can get more speed and quotes that appear versus having to go to a rater. But the other thing we're doing now is also investing in small commercial. So about 4% of our business is commercial. So I just hired a new head of commercial. He's awesome. And he's starting to build out, the entire plan and attack. But again, is small commercial is another great business to be in. And again, it provides, diversification going forward of your revenue streams. And it's another segment of the business that's out there that is just, I don't think it's utilized effectively. The only issue is that when you're virtual with commercial, you've got to kind of look at things a little bit differently. But if you can use marketing and going after specific verticals, you can be successful. Versus, a lot of times it's based on the relationship. So I'm really excited about, for 2025 in terms of where we're going. And, again, the message is diversification.
Yeah. It's interesting you say that. I've been doing a lot of thinking about this, Jeff. Let's kick this around. Let's say that we as producers looking for business, we're in a boat, okay, that's floating in the ocean. And if we look down into the water, the further we go down into the water, rather than it being how many feet deep, we're going to say that that's how much premium deep an account is, right? So we can throw our hook out and we can go to 2,000 in premium, right? We can drop it down more and go 10,000 in premium, 100,000 in premium, 500,000 in premium. Let's go to 1 million. Okay. Let's just say that million is where that's the bottom. That's the big fish. One of the things I've noticed, and I've been doing some thinking, and I love the fact that you're positioning this small business. This is where I'm going, is that what I teach my producers is that I try to get them to come in at 5,000 to 7,000 and hopefully 10,000 eventually minimum revenue on an account. And so the reason why this is hard to get them to do this is I have found out that most people fish between around 15 to 20,000 to around 75 to 100,000 in premium. That's where people fish. If you go in the water, there's hooks everywhere. And then if you go from about 100,000 to 500,000 in premium, you don't find a lot of hooks. But you go after 5,000 or 500,000 in premium and bigger. Now you start to find the Marcia McLennans, the people out there trying to catch the whales. But as I said before, it's the 20 to 75 to 100,000 that everybody's fishing. There's another fishing spot there, which you're talking about, is that 2,000, 5,000, 10,000 premium accounts that no one's fishing, and they can't because they're not efficient enough. But when you're able to be efficient like your agency and drag that data in to create very, very less overhead, little overhead, in order to write that business profitably. Is that kind of what you're seeing? Is that kind of your game plan for why you're going after that line of data, line of business?
Absolutely. That 25,000 in premium and down is really a nice sweet spot, for us. And then also if you can get those 50,000 premium accounts, it's awesome. And then the key is also, and we weren't doing a good job at this, is to, get the package. Where's the comp? Where's the auto? Where's the umbrella? And making sure that all that business is brought to you, because then your retention rate is going to be a lot higher, and you're not going to have to touch the account as much as you need to. But that's exactly the sweet spot that we're going for. It's underserved, and if you can use technology, and there's some other, we have some great competitors out there that are using technology really well. And then we want to do the same thing on the commercial side. I think we're really acing it right now in personal lines, and we're going to continue to ace it. And on the commercial side is that, we're making a strategic investment, to go after that business, be efficient again with technology, and, and provide that. And then if we can be efficient with technology, I can have better conversations with the customer, talk about their business. And that's the goal. That's the game plan.
Jeff, it's the double edge, right? So when we look before data and digitalize, agents won off other lazy agents. Well, we did. We just won. I mean, yes, we could provide better service and whatever, but agents just got lazy. I've gotten lazy on accounts and lost a couple.
Totally.
I mean, I'm not here to point any fingers. We're all human here. But on some agents who never could really make it or get past their so they just kept swimming upstream by the fact that they weren't taking care of their clients. Maybe they weren't communicating with them. Maybe they weren't solving the pain points. Today, I think it even gets more. Now you have these people who refuse to use digital means, and they forget about their customers, just like since the
Yep.
beginning of time, right? But then we
Yep.
also have these digital producers who believe that that digital touch is all that you have to have. And especially when you start getting to commercial, that's just not how it is. And so I start to see it being an easier lines of business, commercial lines, based on the fact that I still have the lazy agents who don't communicate. They just try to write a policy and move on. And then I have these other agents who just are relying on automations to be the touch point that's going to keep that relationship. And so it almost makes it easier out there, which I know that to be a fact because the state farms and a lot of the directs are actually making pushes into those because we're neglecting that. So
no, absolutely.
I've been doing a lot of thinking about this. I love hearing what you're saying here, Jeff. I love it.
Yeah, no, absolutely. And the technology is key because it's the marketing, it's the drip campaigns. So what we do with our clients, we get them on, we onboard them. And then during the year, we constantly are sending out drips, sending out drips in terms of either a cross-sell email, sending out a drips about flood insurance or, about, an issue with, that particular industry that they're in. So we're constantly touching them. And then also we're moving well in advance in terms of doing an insurance review, prior to their policies, coming up for renewal. But I think the key is that if you can use technology to constantly touch your customer, and then the customer, then they can decide, oh, that's interesting, I'm going to click on that. Or, oh, by the way, I need to talk to somebody. You know, and that's how you get in touch with them versus having to, try to remind yourself to pick up the phone. But you got to do that as well. You got to touch base, as well. But I think the key is that for the small business, you write the policies, you expand into other lines, you can get the entire account, you put them on a drip campaign, and then, and then be proactive, on the renewals. And that's the secret sauce. It's not, it's just the way it should happen on a go forward basis. And that's how you can make money, because the more times that you have to touch the account, that's when you're not making money, as an agency, and it's not good for you and it's not good for the customer.
That's right. That's right. So as we wrap this up in the next couple minutes, I want to talk about the future. I believe COVID came in, did a lot of things, but just not to society. Let's talk about insurance and what I call the whiplash that I think that we're right in the middle of, right? So we start injecting over 8-9 trillion billion, how many ever dollars into the economy, into the world. And we know that that's going to make things get crazy, right? I mean, that's going to make things. And then here comes inflation and supply lines and all that. And now we see ourselves coming down on the other side. And I think that people assume that the altitude or the level of the ground, I should say, that we started climbing is going to be the same level of the ground that we're going to reach on the other side. And I just don't think that it is. I think eventually we will kind of more normalize out to what 2018, 2019 was. But I believe that what we're getting ready to see is the opposite of what we just saw for the last 2 years. Most agencies, no matter your size, are growing 30 to 40% over the last 2 years.
Exactly.
I mean, even big agencies your size are growing, as you said, are eclipsing 30%.
Yep.
And it has to do with the fact that nobody had any markets. So people may call us, they may say, hey, my insurance went up. We tell them our horror stories and say, hey, so did mine. We review with them, and they leave us, try to go to another agency, and they find out that that agency doesn't have any markets either. And we keep the business. And so we take on the 20 to 30% rate increase. And so the second thing happens. When that happens and you start to be an agency owner and you start to watch your profit flying through the moon, you're less likely to hire agents, hire producers. So we have two things going on. We've relaxed our renewal system, and we've relaxed our new business processing, because at the end of the day, if being in business is to make a profit, we're all making profits, and our renewal system is not something we're really focused on, nor the business we bring in, because we're getting organic growth.
Right.
I think the opposite is getting ready to happen for the next year and a half to 2 years. I believe, this is my opinion, I believe there will be more businesses, agencies that go out of business and that get acquired in between now and 2027 and 2028. My business partner, I told him, I said, we're loading up to acquire, because what is getting ready to happen is these agencies, it's not going to be technology that eliminates them. It's going to be old-fashioned business that they got relaxed on. You're going to have these companies, and companies, we're already talking to them, large companies and super regionals, already filing state updates, updating their rates in order to cut down and start to give some discounts. So we're seeing those filings coming. It's only going to take, I think the hurricanes may have delayed it a little bit, but by the middle of 2025, it's only going to take 1, 2, or 3 companies, and usually it's the big ones, the State Farms or the Allstates, that start cutting rates. And now all of a sudden, 75% of my business, 75% of your business is all going to start shopping. And God love them, they should, because if I wasn't an insurance agent, I'd be shopping.
Absolutely.
Rates too.
Absolutely.
So they're going to be shopping. So remember what we relaxed on, though. We were relaxed on our renewal process. We were relaxed on new business. So agencies that don't see this are going to have to all of a sudden, and literally in the first quarter, it's going to be dead. And in the second quarter, it's going to be action like you can't ever believe, or second versus third. I don't know which one it is. And I believe it's the agencies that are set up and ready with a good, solid renewal process, and having agents that are sitting there ready for when this happens. I think if you're not, it doesn't mean you have to have both of them. It means you have to have both of them, because if you only have one, you're going to lose on the other side. These are my predictions for the coming years. What say you as we close this up, Jeff?
Yeah, no, absolutely, Jason. Those are great comments. I think that, in talking to the carriers, you're going to see 2025 start to stabilize. You're already seeing with auto insurance on the personal side. So you're seeing it stabilize. And like you said, with Geico going into the independent channel right now, they're going to start, who knows what they're going to do, but they're refiling across the country. So their rates could start coming down. Basically, and the other thing too, is that we invested in the business, 3 years ago. We are now profitable, and we're continuing that profit growth, and it's been all organic. And so we're going to continue to double down on referral sources, in terms of getting new referral sources in. We're going to continue to double down in terms of our retention efforts and using technology. Like we're now offshored, I have about 25 offshored agents that are providing support to us at a lower cost. And there's some great, offshoring firms out there that are helping us, and they're doing, really good tasks that are non-licensed. 30% of our business, is basically non-licensed activities. We're going to continue to invest there to help our retention. And then, like you said as well, is start looking at strategic M&A. And we're in a good spot for that, because, like you said, there's going to be some nice agencies out there that can fit exactly who we are, what we do, and to help, continue our growth. And I think the agents that are not looking to, continue to invest are the ones that are not going to make it. But this is a great business. I mean, insurance is not going away. There's going to be changes out there. There's going to be another, pain point that's going to happen. The hurricanes, the climate change is real. So maybe the rates are not going to come down. We're still going to see issues with homeowners insurance. There's no questions about that. I mean, I'm in New Jersey, and the market is tight, because no one wants to write new business because, they can't get the rate adequacy. So that's got to change, as well. So I think my prediction is that I think rates are going to constantly, they're going to stabilize. And we are going to be having to do more renewals and more, competitions for the renewals. But I think the key is just invest in referral sources, invest in your people. That's really the secret sauce.
Yeah. And Jeff, if I was the head of your guys' business, and to me, it's just as obvious as could be. There's all these agents out there that have created a network referral source just like you guys have, but they have no idea how to get the data to transfer smoothly. It's just about finding those agents and saying, oh, wow, you're getting 50 leads a day from your referral sources. Hey, let us show you how to simplify this. And agents would be blown away by it. Well, Jeffrey, Jeff, I'm just going to keep calling it. And Rough
Jeffrey,
Notes,
Jeff, I don't care.
If you run into him, it's Jeff, not Jeffrey. But so Jeff, Jeff, I do appreciate your time, and once again, congratulations on being the front cover of Rough Notes magazine. Kudos to you, man. That's awesome.
Well, we're super excited, and we really appreciate all the support of Rough Notes magazine, and having that, especially for the month of December, it's just exciting, and the team is pumped up, we're pumped up, and looking forward to 2025.
Iron sharpens iron, and there's nothing like being to be acknowledged by your own peers. So, Jeff, kudos to you on that. Now, to all you Rough Notes listeners, there's a couple things I want you to take out of this. And I have said this since 2018. I said it on a stage in Los Angeles and Las Vegas, in front of probably 1,000 people. And they all went, "Oh." And we're starting to see it. And what that has to do is that the data of your agency is going to be worth more than the renewal or the new business commission that you bring in. And so I think what we start to see it here is the data that Jeffrey and them are able to pull into their agency, right? It's that data that allows them, as he said, I don't have to really ask many more questions. We can just help the other part of our business be more efficient upon using that. I also want to say that I believe that the data they are collecting also becomes very valuable to carriers and to also third parties in the future who will now need to know when the insurance comes due, just like Jeff and them have third parties that they insert themselves into to say, hey, how can we help this be more smooth? And I think we're going to start seeing that as well. And I think that data becomes valuable. Now, for everybody who would sit there and say, Jason, I don't know about that. In 2020, I sold my data through Seth Zaremba. We sold our data to a carrier because we had it in this thing called Neon that allowed us to be able to autonomize our data, turn it into a token. So that data was basically security proof, I guess you could say, encrypted. And they came to us and said, hey, we want to buy some of your data. I didn't know, I wasn't in charge of it, but I did receive a check for $123 for the data that had been taken out of my agency and utilized by an insurance carrier to actually better their rates, right? So how great is it not only for them to be able to get a look at an individual agency and our numbers to them, but also be able to look at an individual agency and look at the clients and numbers to us and the clients' numbers to them based on all the other agents they have. That's the in-depthness that starts to get so much data that we have to have AI come in. And that's what benefits us. I really say it a lot. It's, and I'm just going to end with this without getting into this. This is another podcast for another time, but like individualized rates are here. Individualized rates to be able to get out of this zip code, to be able to say, hey, because you're 46 and you're white and you drive an Audi, this is probably how you're going to drive. No, actually, because you are 46 and white and different than everybody else, this is the reason why we know that you're able to. And I believe that's there, and it's all happening with data. So once again, Jeff, thank you very much. Congratulations to you. Also want to say thank you to Walt and to Christopher Cook and to Dave and all of the people over there that make it happen at Rough Notes. We got one more coming up for this year in December. And this was the first year of the Rough Notes podcast front cover. So once again, thank you, Rough Notes, for being who you are, the staple of the insurance industry, also innovative. And remember what I said before, Walt and Dave didn't have to get innovative to create the podcast. They just had to do a little imitation and realize that it works in other places. They knew it would work here. That's the genius of Dave and Walt and Cook. Once again, this has been Jason Cass, and he is Jeffrey Wingate, also known as Jeff, but Cass never calls him that. We are out.